Okay, so today I will be going over my model. It's very simple. It has passed me 7 combines and multiple figures unfunded. And okay, so we only have 3 confluences for this. First, we need to identify a higher time frame bias. So we'd go to the 1 hour and 4 hour and only trade within that bias. So if the 1 hour, 4 hour is looking in a bearish bias, bullish bias is in an uptrend, and the 1 hour is also an uptrend. So we're looking for longs only today. After that, we would need a liquidity sweep to the opposite side of the bias. So if price is in a uptrend, then we need to. Wait, that's not good. That's not a good demonstration. If price is in a uptrend, then we need to wait for a liquidity sweep to the downside. So we need to wait for this to be swept out before we can keep going up. Okay, and then lastly, we need to identify fair value gap on the move that caused the liquidity sweep, and then once it gets inverse, that's when we enter. So this is how it looked like. So we already identified our bias that it is bullish, so we're looking for longs only. Now this is market open, so let's let it play out for a minute. So as you can see, we're in an uptrend, so we need to wait for liquidity to be taken out. So right now resting liquidity would be right here. Now we just need to wait for one of those to be taken out. Okay, this has been taken out, and now we would need to. This has been taken out, but it's been taken out by a wick, so we would find no entry. We need a body candle closure below this line, so we'd wait. Now liquidity has been moved to down here because that's already been swept out, but we can't trade off of it. We can't find an entry off of it. Okay. Now this has been taken out, so now we just need to identify our gaps. So if we can look here, we have a gap right here and another fair value gap right here. So we need to wait for both of them to be inversed. But another thing is that let's add it. The fair value gaps have to be the same type and same color. So it has to be either 3 bearish candles like these 3 red candles, or 3 bullish candles like these 3 over here. It cannot be a green and 2 reds or anything like that. It has to be either 3 greens or 3 reds. So now that's been taken out. Now we gotta wait for an inversion. No inversion yet. Let's check if there's any higher time frame gaps. Okay, as you can see here, the higher time frame gaps have more meaning. Right here, there's a 3-minute gap, and let's mark that out like this. Go back to the 1 minute. Place this here. Now we just need to wait for all 3 of our zones to be inversed before we can find an entry. So we need a body candle closure over this top square. That's when we can enter. Okay, perfect. All of our demand zones got inversed. So now this is where we would normally enter. We'd enter long. Always enter with our bias. Our bias is bullish. We can set our take profit to these highs, equal highs up here. So our take profit would hit these highs right here, as you can see. And then our stop loss, we'd leave it as a normal 1-to-1. No, usually we'd go for a 1-to-1, but these highs here have more demand, so we'd go to them. And we can keep our stop here, or we can move it under this fair value gap right here, but this is good momentum to the upside. And our break even would be right here. So after this gets taken out, we'd set our stop to break even. Let's see how this plays out. Buy, set our take profit, set our stop loss. Now, see how it plays out. Okay, now our break even line has been swept, so let's move it here. Now our trade is risk free. Okay, see, so that trade did end up working out. Made a 1 to 1.5, so positive RR. Okay, now let's